Hi, my name is Tony. I'm an accountant and I specialise in helping ambitious small business owners achieve a six-figure, tax-efficient lifestyle business. Welcome to this week's edition of Tony's Tax Tips. For those here for the first time, welcome and thank you for joining me. For those that come back again, thank you very much for your support. This week I want to talk about renting out of holiday homes. Now, holiday homes are typically homes that are used partly for private purposes or even totally for private purposes, but sometimes they are rented out to external parties. So what happens from a tax return perspective? Do we claim them? Can we claim them? Well, holiday homes are no different to other standard rental properties. For the periods that you do rent them out externally, or that they are genuinely available for rent externally, then you can claim them. You can claim the expenses accordingly. And you do so simply by apportioning those expenses based on the period of time that it is rented or available for rent and the time that you use them for private personal purposes. So that's simple enough, absolutely. So what are the factors that would indicate that the property is genuinely available for rent? Well, the ATO would require you to either have it registered with a real estate agent and be advertising actively out in the marketplace, or even if you don't have it with a real estate agent, you would need to prove that you are actively marketing it and advertising it in the general marketplace. So to just offer it to family and friends, or to put a little notice board up on the at work, typically the ATO wouldn't accept that is genuinely available for rent to the open marketplace. And things like discounting heavily to, again, family, friends or work colleagues might not be an indicator that it is genuinely available for rent. So you need to be mindful of those things, okay? So it needs to be openly marketed and advertised to all and sundry, to the public, and you need to be achieving a market rent for the period of time that it is rented out. So if you're using it for school holidays or Christmas time, and then for the rest of the year that it is available, then again, as I said, based on the number of days that it is available versus when you're using it, you simply apportion the expenses accordingly. If you don't rent it at all, and it's never available for rent, then you don't need to include it on your tax return. Simple enough. However, you do need to make sure you keep all of your details with regards to the purchase and with regards to the sale, if and when you do sell it. Because at that point, it will need to be included in your tax return because there will be a capital gains tax event. So whether you've achieved a gain or a loss, at the point that you do sell it is when you will definitely need to include it in your tax return. Okay, so hopefully that clears a lot of that up for all the people out there that have holiday homes. So if you're renting it, no problem at all, claim the expenses. If it's partly rented and available for rent, then you apportion. If it's not rented at all, then it just doesn't go into your tax return until you sell. So hopefully that's been of benefit to all of you. Thank you again for joining me. I do appreciate it. Just a couple of notes as I do with these weekly tax tips. Do like us on Facebook at AD Partners. Do jump on there. There's a lot of great information that we upload, including these videos and a lot of other information and useful hints. And do yourself a favour and also download the AD Partners app. Free app. Jump on the App Store and download it. There's some fantastic features on there. I've spoken about a number of them. So as I said, it'll make tax time easy for you, and you won't have to hold any little receipts and fear for losing them. Logbooks, tax rates, all anything you want to know from a tax perspective. So thanks again for joining me. Bye for now, and I look forward to seeing you all next week. Thank you.